Hi guys, welcome back to Financing as a Freelancer. Today we are going to cover the bare bones basics of the financial realities of being a freelancer in the United States. In particular, we are going to cover just two things. The first is, what does it mean to be a freelancer, legally speaking, and how do you even know that you are a freelancer? And then secondly, given that you are a freelancer, we're going to cover how that is financially very different from being an employee of another organization, and therefore how you should think about your freelance business and how you should shift your mindset from that of being an employee of another organization. Today, we're not going to dive into the nitty-gritty details of tracking your expenses or legal or anything like that. Today is really just about the large-scale mindset of what it means to be a freelancer, so that when we dive into the nitty-gritty later, you can appreciate why we're doing that. With that, we're going to get started. To begin, we're going to revisit the W-9 form that we looked at in the last video. As a reminder, this form is a form that you sign with each client that you have when you are a freelancer. So, what does it actually even mean to be a freelancer? What it means to be a freelancer is that you are a one-woman or one-man business. So you are a business, but the only employee of that business is yourself. Now, there's multiple ways that you can be your own business. If you look in section 3 of this W-9 form, you'll notice that the government is asking you to identify what type of business you are. We're going to ignore all these other types of businesses because these types of businesses are a bit complicated. You have to file a business license, you have to get a business tax number, you have to file separate taxes for the business and for yourself at the end of the year. And it's a lot of work for not a ton of gain, especially when you're starting out. If your freelance business becomes extremely successful, then it might be worth it to think about these different types of corporations. But when you're starting as a freelancer, almost every single person I know who's a freelancer starts their freelance job by checking this box, the individual or sole proprietor box. You can ignore single member LLC for the time being. So what does it mean to be a sole proprietor? What it means to be a sole proprietor is, hey, I'm not going to start a business license or create a whole separate business account and separate bank accounts. But by checking this box, what you're saying is, for this client I'm signing my form with, whenever that client pays me, the government should think about it as paying a business that I have, even though I haven't started my own business license. So any check that this client writes to Vikas will be treated as a check to Vikas business, even though that business has not been incorporated anywhere. So by checking this individual or sole proprietor box on a W-9 form, that makes you a freelancer. So if you check this box one or more times per year, that makes you a freelancer. As your freelance business goes, you will be signing this W-9 form a ton of times in the year because for every single client you work with, they will ask you to sign this W-9 form. So you'll get very familiar with this form very quickly as your freelance business grows. But the important thing to realize here is by checking this box, that legally makes you a sole proprietor, i.e. a freelancer in the eyes of the US government. So to understand why that matters, we're going to go back to our diagram that we had from our last lesson. So as a quick review, what this diagram shows is three things: Seattle Dance Academy, which is a fictitious business, me as the dance teacher or one of the dance teachers at this dance academy, and then the IRS, and how both the business, i.e. Seattle Dance Academy, and I both owe taxes to the IRS. Now, to begin to understand what it means to be a sole proprietor, we're going to first consider a slightly tangential example of what happens if I were to be the owner of the Seattle Dance Academy. So what happens if I created a business called Seattle Dance Academy and, I had a bunch of dance teachers, but I was also an employee of my own business? So clients, parents would write checks to Seattle Dance Academy. Seattle Dance Academy would pay some expenses. It would pay the IRS healthcare tax and corporate tax. And then it would pay all of its employees, including me, a salary. So even though I own Seattle Dance Academy, I would have to write a check to myself from Seattle Dance Academy to Vikasarun for whatever my salary or wages were for that month. And even though I own this business and the business paid healthcare tax and corporate tax, when I write a check from the business to myself, that becomes my income, and I will still have to pay the IRS income tax and healthcare tax on the check that I received from my own business. So one could argue that from my perspective as being the owner of Seattle Dance Academy, kind of paying tax twice. I'm paying tax to the IRS for all the money that the business makes, and then when I write a check to myself from the business, then I owe the IRS money again, taxes again on that money that I paid myself. So this is what it's like when I, have a business license and I am the employee or one of the employees of my own business. So what does this have to do with being a sole proprietorship? So when you are a sole proprietor and when you check this box in this W-9 form, what you are saying to the government is, hey, for every check that this client writes me, you should treat it as a check that they are paying to my business, even though I don't have an incorporated business. So the way to think about this is, instead of owning a business called Seattle Dance Academy, this is as if I were owning a business that just happened to be titled Vikasarun. Oh wow, my handwriting is terrible today on this. So, anytime the client writes a check to Vikasarun, it is as if they're writing a check to the business that is also named Vikasarun. That business pays expenses, right? So as a traveling dance teacher and choreographer, I'm paying for my flights, I'm paying for my hotels, I'm paying for food while I'm on the road, I'm paying for my website, I'm paying for business cards, I'm paying for all sorts of things. Now, the complicated thing about being a sole proprietorship is you are both the business and you are the employee of your own business. So therefore, you owe taxes both as if you were a business and as if you were an employee of that business. So to make your life a bit easier, the federal government has been nice and said, hey, as a sole proprietor, you don't have to worry about corporate taxes. So we're going to erase this portion. However, you do have to worry about every other item on this list. So the way it works is, when somebody pays Vikasarun, I can subtract any expenses I incurred to provide that service. So I can, subtract my flight costs out or whatever. But then Vikasarun will owe healthcare tax to the IRS on behalf of Vikasarun, the business. Then the rest of the money is treated as income to Vikasarun, the employee, and Vikasarun, the employee, will pay income tax to the IRS, and they will pay the employee healthcare tax to the IRS. So this is a bit complicated. So let's revisit the employee diagram to compare and contrast these two and see what this means. Again, if I were the employee of my own business, the business would pay healthcare tax to the IRS, and the business would pay corporate tax to the IRS. And then when I write myself a check from the business, I would pay income and healthcare tax to the IRS. When you are a freelancer, essentially what the government says is, hey, when somebody writes you a check, you pay off your expenses, and you have to pay the business portion of the healthcare tax to the IRS. All the remaining money after you paid your expenses and your healthcare tax, I'm going to treat as income to you because you are the only employee of your business. And you must pay income tax and healthcare tax on all of that money because it is your income. So another way to think about this is that because you are both the business and the employee, you are responsible for paying the healthcare tax times 2. You have to pay the healthcare tax on behalf of Vikasarun, the business, and you have to pay the healthcare tax on behalf of Vikasarun, the employee. You also have to provide yourself with healthcare because Vikasarun, the business, has to provide Vikasarun, the employee, with healthcare. So this becomes a bit complicated, right? When you make money, you have to pay off whatever expenses you might have. And then, unlike what you had to do when you were an employee, you have one additional tax. You have an additional portion of the healthcare tax. When you were an employee, you paid only 50% of the healthcare tax, or about 6 to 7% in your healthcare tax. When you're a freelancer, because you have to pay the healthcare tax for both the business and for the employee, since you're both the business and the employee, you owe about 15% in healthcare tax to the IRS rather than about 7% of healthcare tax to the IRS. In other words, you are double taxed. This is known as the self-employment tax. In other words, because you are both the business and an employee, you incur an additional tax on behalf of your business. So the core thing to realize here is that when you are receiving checks from your clients, you shouldn't be thinking about the checks you're receiving from your clients as your salary, which is what you would think of that as if you were an employee, right? So if you're a dancer and you're traveling and you're teaching at conventions and you have all this work and your clients are writing you $70,000 worth of checks a year, you don't want to think about that as, oh, this is awesome. This is as if I'm a dance teacher and I'm making $70,000 a year. That's not accurate. From that $70,000, you're going to spend some of that money on expenses. Let's pretend you spend $10K on expenses, so now you have $60,000. You will then have to pay 2 portions of the healthcare tax as well as income tax, which will probably take up, somewhere between 25 and 30% of your money. So the remaining portion of your money is income, and you also have to pay your own healthcare with the remaining portion of that money. This is the key to understanding what it means to be a freelancer. When you're a freelancer, you want to think of all the checks that are written to you, not as a salary, but you want to think about it as revenue. And that revenue goes towards paying a lot of expenses and taxes, and then some portion of that revenue will eventually make it to you as your salary. Or, in other words, you want to think about it akin to being an owner of a business, right? As the owner of Seattle Dance Academy, when my parents write me checks, I don't just add up all those checks and say, wow, this is awesome. All this money is going straight into my personal bank account. I know that even though parents are writing me lots of checks, a lot of that money is going to go into expenses and into various taxes. The same goes true for a freelancer. So when your clients are writing you those checks, you don't want to think, oh, that's awesome. All of that money is going straight into my bank account. I'm making a lot of money. You want to think, oh, my business is doing great, but as part of running a business, I have to spend money on some expenses, and I have to pay a decent amount of taxes for both myself and for the business, and then some of that revenue is going to make it to me to pay my salary. This is really important because a lot of times freelancers make the mistake of assuming that, hey, I make $70,000 in revenue. I'm making way more money than I made being a dance teacher at Seattle Dance Academy. But that's kind of comparing apples to oranges, right? What you want to do is once you've taken in all your money from your clients, once you've paid off all of your expenses, once you've paid your income tax and your healthcare tax and provided yourself a healthcare, then you take that money and say, how does that compare to what I would have made had I been an employee? And that's an accurate comparison to make. So again, the goal here is to just help you realize that when you're a freelancer, the checks that you get written are not your salary, they are revenue to your business, and your salary is a significantly smaller portion of that. In future videos, we'll talk about how do you go about tracking these expenses and estimating what these expenses will be in the future. How do you go about tracking these expenses and trying to make sure that the amount of money that you pay yourself is as high as possible. But for now, hopefully this just helps you understand that when you are a freelancer, you have to think about yourself very differently from when you're an employee. And when you look at all the checks that you're making, you need to understand that that money is not just going straight into your bank account, it's going into your business that you own. And you're spending that money on expenses and taxes, and you will only get to keep a much smaller portion of that money. Hopefully that makes sense. I know that was a bit complicated. Let me know if you have any questions, and if not, I will see you next time for when we compare and contrast the benefits, the pros and cons of being an employee versus being a freelancer.